All right, welcome back, everybody. John Caruso here, Monday morning, August 29th. Quick look in on the market. Of course, by now we've all had a chance to digest Powell's comments from Friday. He did speak briefly. I think the speech was only about 10 minutes long, and some of the highlights that he mentioned. July's lower inflation readings are welcome, but fall short of what is required before the Fed is sure inflation is declining. He pledged to use the Fed's tools forcefully, and he even mentioned the word pain, that households could begin to feel some pain. So a pretty ominous speech that he delivered to the market. That sent the market spiraling lower. The S&P 500, the Nasdaq, the Russell 2000 dropped precipitously. I looked at the 30-minute chart. I think there was only one bar that was actually positive on Friday. It was straight down following Powell's speech. We did see the S&P close down about 3.8%. Nasdaq was down 4.75%. And the Russell 2000 was down nearly 4% as well. More downside off the open last night. So it does look like we're going to get another week open. And the IVOL discount, we actually still have an IVOL discount in the Nasdaq, which is telling me that this probably isn't over just yet. So buckle up as we've got a very important week in front of us here. We do have ISM manufacturing coming out later on this week, consumer confidence data, and of course at the end of the week we've got the August non-farm payrolls report. So we're going to be keeping our ear to the ground for all of that data. So the other question that this kind of raises right now, because everyone in a world where everyone fantasizes about soft landings by the Federal Reserve, you have to ask yourself this question: is the recession actually the remedy and not simply just the side effect to the Fed's action? So does the Fed believe that the economy needs to go into a recession to be able to stave off the 8.5% inflation reading? So it's something to really think about. They're never going to tell you the truth. They're never going to tell you that. But I'm starting to think in that direction, that the Fed does honestly believe that a recession is necessary to stave off inflation at this point. So taking a look elsewhere, metals were down across the board on Friday. We actually did have a signal out there selling copper, so that's a +1 for the home team here this morning. Copper's down 3%. Gold prices are lower. Silver prices are lower. It does look like they're fighting off some oversold levels right now. I believe gold has since bounced, since retesting 1731, has since bounced back to about 1748 this morning. There was an interesting article in Barron's this weekend expressing that gold has essentially done its job for the year. Gold's down 4% on the year, whereas the S&P 500, the Nasdaq, are all down between 15 and 17% here this morning, year to date. So gold has done its job in terms of acting as a safe haven status. Of course, down 4% doesn't put money in your pocket, but if you had to put money somewhere to work at the beginning of this year, gold wasn't the worst option. Obviously, cash and the U.S. dollar index have been the best options for your money year to date. Energy prices right now, I'm actually agnostic to energy. Usually in this part of the cycle, we should see energy prices coming in. We have seen crude oil prices drop pretty aggressively over the last few months. However, I do think that we might be trying to set a near-term bottom in crude oil here. We're trading right around 94 this morning. It is up on the morning. And if we can puncture back through 95.05, I think we could make a run to 100. However, you get up between 100 to 105, that is actually flipping the chart to a more bullish posture. But I think you want to be aware or be careful that we could see more setbacks coming from those levels. So that's all I have for you today. Best of luck to you out there. We'll catch you back here tomorrow.